They say that beginners like you can never master the smart money market structure, that it's only for advanced traders. They lied. Today you will learn 7 levels to go from beginner to beast mode. I will show you how to mark your chart correctly step by step. I will break down a 10 RR trade I took, review common mistakes traders make. By the end, you automatically be an advanced trader. Level 1 is what? The plain market structure. Plain market structure is a skeleton price movement is built on. Everything that is being traded in the market is being based off of this what? Plain market structure, guys. To understand plain market structure, you have to understand these 3 things: higher low, higher high, and break of market structure, guys. Higher low is the lowest price got to before making a break of market structure to the upside. Where is the lowest it got to? Here, before what? Making a break of market structure to the upside. What then is this break of market structure, guys? Break of market structure is when we have a candle close above the highs created. So when we have a candle close above this high, we have what? A break of market structure, guys. So moving to the chart, this is what plain market structure looks like. When we have this candle come to close above this particular high, we have what we call a break of market structure, guys. Mistake I see traders make is what? Taking this as a break of market structure. This is wrong, guys. You see that this one has a weak close and this one has a candle close. Always wait for what? A candle close, guys. Another mistake I see traders make is what? When we had this what? Candle close here, guys. So we could have our next candle was close above these highs, but not close above this candle wick that wicked this high. Is this a break of market structure, guys? Answer. The answer is no, guys. We must patiently wait for a candle close above this high, and we mark out our break of market structure like this, and we connect from this high to this level. So this is a new GBP-USD trade I took and sent to my Telegram community. As I was making this video, it ran a 1:4, currently 5 raised to reward ratio. We are targeting here though. Can you see how we had a weak here? And this is when we had our candle close. Someone watching me will ask Vitos, know what if the next candle is unable to still close above this wick here? What should we do? We must wait for our next candle to have a candle close above, not this one, this one. We keep doing this until we get a candle close. I will mark out our break of market structure like this, and we connect from here to here. Example with this trade I took, can you see we continued having weak here, weak here, weak here, weak here, weak here, and when we finally had our break of market structure was when this particular candle closed above this side. Can you see how I drew it out and how I connected it? This is necessary, guys. So next is what? Our higher high, guys. Our higher high is the highest price action got to before making a higher low. Here is a high, right? And when it traced here and came to raise this high, giving us a break of market structure, confirming here as our higher low. Here was our higher high, highest it came to, because what? This high is greater than what? This particular high. This high is greater than this particular high. So when price action is exhibiting all this, we want to buy in the market at the point of order blocks. Order blocks are places institutions like the banks, hedge funds have placed here, buy or sell order, guys. So we have 3 types of market participants: the banks and the hedge funds and the retailers, which is me and you. The banks and the hedge funds have the largest money in the market. Me and you have little or no money. The effect the banks have on the market is that these guys are able to move price rapidly. But me and you, our money don't even have any effect in the market. It's just like when you add a drop of water. Can you see why in smart money trading you have to always flow with the banks and hedge funds? Because these banks and hedge funds are what? The smart money, guys. This is what basic structure looks like. This is my higher low, break of market structure, higher high, higher low, break of market structure, higher high. Mark out my order block, the last bearish candle before these bullish candles. I want to wait for price action to come back here and will trade to this high. Hence, these highs will always attract price. So I'll talk more about different types of order blocks in a moment. In some case scenarios, we can see price action come to break below this higher low, violating this higher low. We call it what we call a market structure shift, guys. That means we've moved from what an uptrend to what downtrend. We want to what sell in the market at the point of a bearish order block. Guys, to understand the bearish framework, you have to understand lower high break of market structure. We have a lot to learn for us to be advanced traders by this video's end. So I want you guys, this bearish framework, flip what we've learned for bullish framework, just turn it upside down. So the second level you need to attend for you to master market structure is what? Realistic market structure, which is the underlying framework of how price really moves in the market. Is the realistic way price action move in the market. We can see that price action didn't just move down in a straight line. In fact, we pushed down, we pushed up, we pushed down again. In fact, some traders would think that this is a downtrend. But can you see when price action goes to a specific level, it reverses immediately. In this case scenario, some traders will try to enter after we broke this particular high, thinking it's a market structure shift, something like this order block here, trade to the upside. But can you say what? They lost and price action moved in their direction. These guys were right about the direction, but they were wrong about the timing they entered. So to avoid this mistake, you have to understand this. Number one, internal structure. B is external structure, guys. Internal structure is a market structure within a larger market structure, guys. These points you are seeing here, these points are our larger market structure, our higher high and higher low we talked about. And these guys like this are our smaller market structure within these guys. It even have its lower high, lower low, lower high, lower low within it. Can you see that our internal structure can come in a straight line, can come in a wave pattern, can come in a wave pattern, can come in a wave pattern. You can also picture this as the difference between the higher high and the higher low, the higher high and the higher low, which takes us to what? Level 3, which is external structure. It is the difference between the higher low and what's the higher high, the higher low and the higher high. Can you now see that it gets harder as we move? Someone watching will say, but Victor Snow, seems like this internal structure and external structure, these guys, they sound so much alike. How can we be able to differentiate these two? Picture this as what? The external structures are in direction of our trend, direction of our trend, direction of our trend. Why the internal structures are what? Opposite of our trend, opposite of our trend, guys. If you're getting value from this video, show some love, like and subscribe. Daniel first said I should make videos about market structure for beginners to advanced traders. Shout out to him. This is raw market structure footage, USD-JPY. This is the real way price action moves daily. Pay it to the basic way we've been learning. If you don't understand what I've been teaching you, can you see our internal structure, guys? And there can you see our external structure, guys. But mistake I see traders make is identifying this as a market structure. If I think here is a pullback, I'll talk about this in a moment. We are now in level 4, which is what? Valid pullback need for you to master market structure. Have you experienced this? Comment down below. This structure right here, this is a break of market structure. It's a higher low, a higher high. Got an order block to trade from, and immediately you lose the trade. And you now think it is what? A market structure shift. You mark out what? An order block, entry, stop loss above here. And can you see price action move down like this? When it tapped this particular order block right here, the real market structure and real order block, it moved to the upside, taking you out that want to enter from here. You come again, you see a structure like this, probably you see little to not enter since this structure failed you. Can you see that if would have taken this trade, it would have gone in your direction? So the question here is what? Why did this work and this fail, even though they look so much alike? Because of this is what? A valid pullback, and this is what? An invalid pullback. A valid pullback is a pullback that swept a low before a break of market structure. This is a pullback. It swept this particular low before going to make a break of market structure. And can you see this pullback right here wasn't able to sweep this low before making a break of market structure. Watch valid pullback and invalid pullback to understand this concept more. So number 5 level you need to attend is what? Time frame synchronization, guys. Time frame synchronization says that all these I've taught you won't be able to work if you are unable to align our lower time frames direction to our higher time frame direction. This lines on black is our higher time frame, everything I've been teaching you, and this purple line is our lower time frame, our 5 minutes time frame. Our purple line is in a downtrend, meaning that we can have a bearish order block here, supply zone. Can you see that if you want to buy from here, the price action will retrace back to this level and would return back here, and sometimes would take you out. And that is what we always have to wait for, what we call a lower time frame entry signal, guys. What we want is what we want price action to take out these sellers in the market, a market structure shift. Can you now see that our lower time frame is now in direction with our higher time frame, guys? We now mark out our lower time frame order block, wait for price action to return back here, and we trade to the upside, guys. I'm going to show you a strategy I shared in my Telegram community, 1:10 risk reward ratio, guys. I'll show you how to catch it in a moment. What I did is what my higher time frame was the 4-hour and my lower time frame was the 15 minutes, guys. You can use daily and 1 hour. Guys, this is USD-JPY, the 4-hour time frame, guys. Can you see what you have? A break of market structure, lower high, lower low, break of market structure, lower high, lower low. And can you see when we started coming up here, we first of all we wicked here, and this is when we had a candle closure above these highs right here, and this is how I market my market structure shift, guys. So again, can you see another break of market structure, higher low, higher high, guys, and I marked out this other block right here. I want to wait for price action to return back to this order block. I'll trade to the upside, guys. Watch a complete order block trading course to understand more about order blocks in depth. I'll move to 15 minutes time frame and I'll wait for price action to get here. We are in a downtrend, and can you see break on market structure, lower high, lower low, break on market structure, lower high, lower low. Can you see that traders are still selling in the market? That if I would have bought here immediately, this other block right here would have reversed trade, and that's why I have to patiently wait for price action to come and break market structure shift. Mark out my other block right here, make my entry at this consequent encroachment of this other block, stop loss a little bit below here, and I target these highs as my take profit level, guys, giving me a 1:10 risk reward ratio, guys. Let's see how it unfolds, guys. Okay, now guys, it came to fill-loss and we are in the setup. Okay, almost at take profit level, guys. Can you see? We wicked full take profit level, guys. You can see here I actually have what a second entry right here. So can you see? Marked out another other block right here. Price action have been going to the upside, but it have not retraced to this other block, guys. Show me some love, like and subscribe if you're getting value from this video. All this worked because of what we call level 6, which is what liquidity, guys. Liquidity is equals to money in the market. This is how it happens. Me and you will deposit our money in the what? In the bank, and from our bank we transfer it to what? Our broker, and from our broker we can access it when we want to buy or sell in the market using our what? Market order, limit order, buy stop order, sell stop order. Can you see how we are able to provide liquidity for the market? While we were waiting for our trade here to fill us in, there are some traders here that saw here as a place to enter from. In fact, they marked out what an order block right here to trade from to the upside. But can you see that price action moved the wire in that direction and what failed, guys, taking out their liquidity, which is their sell stop order right here, or their money. And when it came back here, it now moved in our direction, guys. That is to say that our trades won't be able to run without liquidity in the market. Just like your appliances at home won't be able to work without electricity coming on. Just like when you will not be able to go about your daily tasks if you don't eat food. our trades won't be able to move without price action taking out those guys' liquidity, which takes us to what? Number 7. Congratulations, after this you are now an advanced trader. So number 7, which is what? High level market structure, guys, which says that we don't trade every market structure we see in the market. We trade only the ones that have swept towards a higher low and came to make what? A break of market structure. That is when we can actually what? Trade in the market. And here won't be called a higher low or what? A higher high, but rather a valid structure low and a valid structure high in the market, guys. And another block from here gives us a higher probability setup called an ICT setup, and that is why trading from this other block gives us the highest probability setup, guys. I put this together in a video called Unlock the Secret Market Structure. I'm Victor Snow, and this is Trading from the Soul, where I take ICT complex concepts and I break them down in such a way even a 5-year-old can understand it. If you got value from this video, show me some love, like and subscribe. Besides, you don't want to miss out on future videos, and always tell me a topic you want to see next. It helps me make better videos for you guys. If you're serious about learning the smart money concepts and stop blowing your accounts, this is where to start. I put together this video and every other video in a comprehensive way so you can understand properly. The next video in this series is called Unlock the Secret Market Structure.